Also coming up on today's show. South Africa's energy regulator and energy ministry are sued for the country's planned new coal plants. And there's a light at the end of the tunnel for trade negotiations between China and the US. And we bring you innovative ideas aimed at improving lives at this year's Global Grad show. Well, let's start off today's show in South Africa. The country's Reserve Bank has hiked rates by 25 basis points. It is the first rate hike in about 3 years. Now, the central bank wrapped up its last monetary policy meeting for 2021 this week. It warned of higher inflationary risks. Governor Leseja Kganyago noted a weaker rand, higher oil prices, increased electricity prices, elevated wages, and global supply disruptions as some of the main drivers to inflation in South Africa. Now, the repo rate will move to 3.75% and the prime lending rate will be adjusted to 7.25%. The bank also cut rates aggressively in 2020 to help support the South African economy and consumers during the COVID-19 pandemic.
Since the September meeting, the rand has depreciated by 5.9% against the US dollar and now sits below its equilibrium level. Oil prices are revised up for this year, and fuel price inflation is higher at 17.6%. Local electricity price inflation for 2021 remains at 10.1%, while the forecast for 2022 and 2023 is revised up to 14.4%. The bank's forecast reflects higher headline inflation for the fourth quarter at 5.3%. For this year and the next 2 years, headline consumer price inflation is revised slightly higher to 4.5% for 2021.
And to more news coming out of the country. South Africa's energy regulator and energy ministry, minister, are being sued by environmental activists over national plans to allow the construction of new coal-fired power plants. Now, the action was taken after Energy Minister Grad failed to respond to a 17th September letter of demand. Plans for the construction of 1,500 megawatts of coal-fired generation capacity are included in the 2019 Integrated Resource Plan for Electricity, which was passed on September 25th last year. Now, the Center for Environmental Rights says new coal-fired power plants infringe people's constitutional rights to an environment not harmful to health and well-being, not only for the present generations, but for future ones too. Well, let's delve further into this and discuss it further with Angelo Coppola. He joins us now in Johannesburg. Angelo, always good to see you on the show. Now, given that currently South Africa relies on coal for more than 80% of its power, is this lawsuit expected to have any significant impact on South Africa's government plan to construct new coal-fired power plants in the country?
Well, Uche, if this does actually go to court, the state's going to have lots of arguments against changes to their coal-fired power station plan, because basically the bottom line is this: nuclear is unaffordable at the moment, and the build time is probably about 10 to 12 years per plant. And while we've got lots of sun, solar panels won't meet the industrial needs of the country to grow economically. There's also a clue about what's likely to happen, and that's in how Minerals and Energy Minister Grad and his Environmental Affairs Minister Barbara Creecy refused to sign the global pact to stop those new coal-fired power stations being built locally, and that was at COP last week, COP26. So we expect a long, hard legal battle here with no clear winner anytime soon, which is probably going to mean we're going to see more electricity blackouts and more stress on pressure on the economy, because the utility can't meet demand as we grow our economy, hopefully. Uche?
Well, Angelo, this is quite ironic, because this week we know the country's energy department was reported to have announced that it will start preparing for the end of coal for power use in South Africa. It's also setting up a just energy transition unit. What more do we know about that plan? Does it signal that there could be a change in energy policy going forward?
Well, look, the Energy Department joins Eskom, which has set up a similar unit, a Just Transition Unit, and they did that a little while ago. That unit's been running for more than a year now, and it's been building its strategy and getting involved in high-level negotiations and talks. Most recently, they were involved with Eskom CEO De Ruyter in talks with a high-level delegation that visited from Europe. In terms of a change in energy policy, probably not going to see that happen. We're probably going to see more of a modification of existing policy with a just transition as an open-ended goal. In fact, one of the coal executives I spoke to recently suggested that the just transition in Germany, for example, is going to take years still, and they've been at it for years. So it looks like it will be open-ended. It's not seen as a conflict of interest, interestingly enough, with the ambitious climate change goals that have been announced by government before COP26. So it looks like it's going to be muddling along to see how and when they can introduce coal as a new into those new plants, Uche.
Well, Angelo, it's also reported that a number of Eskom's plants, that of course is the power utility, they're nearing their scheduled decommissioning dates. Now, given that South Africa will be in need of additional power generation capacity, what then are South Africa's options realistically when it comes to power sources?
Well, look, I mean, just yesterday, in fact, we had 5 units go down, which led to more blackouts happening for the next couple of days, in fact, going into Saturday. We have lots of coal, lots of it in the ground, in fact. There's a lot of experience in building big coal-fired power stations, although that experience isn't good with Medupe and Kusile, but it's experience nonetheless. And of course, they were also badly over budget, that they nearly broke the country's economic back. It's still experience, though. Nuclear power is probably a decade away at least, and hugely expensive. Solar, wind and hydro will only fill some of the gaps, the experts are telling me. So there are plans afoot for self-generation from some of the mining companies, but it remains unclear how much electricity will then be released for common users or regular users to get access to. So we come back to coal, whether we like it or not, and as you can see, some people clearly don't like it. So there is going to be that legal tussle we were talking about, but coal looks like the only solution for the foreseeable future as we go into that just transition that everybody's buying into right now. Uche?
Well, certainly interesting times. Many thanks, Angelo, for those insights. That's Angelo Coppola joining us there in Johannesburg. Now, Egypt is one of the nearly 200 nations that made a historic pledge at the COP26 Climate Summit to speed up the end of fossil fuel subsidies and also reduce the use of coal. Now, the North African nation has adopted a law to force industries to replace 10% of their coal energy with renewables as a first step to phase out coal in the country. But as Yasser Hakim now explains, the transition to clean energy will not be easy, especially for its coal-dependent cement industries.
Signing up to the COP26 agreement is a reflection of Egypt's strategy to target 42% of its energy output from renewables by 2030. The North African country pledged in Glasgow to gradually phase out the use of coal, which is a high carbon emitter. Cement is the main industry to be affected by the decision. 16 out of the country's 18 factories are heavily dependent on the fossil fuel, importing $1 billion worth of coal annually. Medhat Stefanos, who heads the cement division at the Federation of Egyptian Industries, says the transformation could be challenging.
The sources of energy are known, either petroleum products or natural gas or coal. There is no other choice except renewable, but this can only cover parts of our consumption. You still need petroleum, diesel, coal or natural gas as the main energy.
Some experts, however, maintain that renewable energy is not yet ideal for heavy industries, which they say needs constant and adequate supply of energy.
Cement factories operate 24 hours a day and need continuous power sources, while renewables are not sustainable. They produce an average 8 hours a day. If there is no sun or continuous wind, production will stop.
Egyptian factories had to introduce coal energy in 2016 as a replacement to the more expensive and scarce petroleum products. Now they're expected to invest huge amounts of cash again to replace coal.
They are studying hydrogen as an option, but on the short term, natural gas is the best alternative to coal. Not the polluting petroleum or fuel. But natural gas is more expensive than coal. It also needs strong, costly infrastructure and pipelines to supply the gas.
Necessity forces itself on us. Whether the investment in infrastructure will cost us a lot or not, we will have to assess the situation and will have to adapt to what the state, the society, and even the global community requires. But inevitably, there will be huge expenses.
The stakes are high. There are 1.5 million workers in cement factories that supply the ongoing mega construction projects in the northern African country. Therefore, some experts are calling on the government to offer financial support to the industry through this difficult transformation process. Yasser Hakim for CGTN, Cairo.
And now let's turn our attention to some corporate headlines. Africa's largest mobile operator, MTN, has just concluded the sale and leaseback of its South Africa towers with Nigeria's IHS Towers. Now, the firm says the almost $400 million deal aligns with MTN's goal of exiting non-core assets. The firm also plans to reinvest the proceeds into strategic growth initiatives, such as securing high-demand spectrum frequencies. Meanwhile, Tiger Brands, which suffered losses of almost $10 million due to the unrest in South Africa this past July, has become the latest major company in the country to be subjected to a damaging strike. The union, representing about 1,200 members, said that the wage strike started a week ago. That's after negotiations reached a deadlock. The union is demanding a 7% wage hike, while management offered just 3%. Meanwhile, global beer-making company AB InBev is hoping its new KD Barley variant will help to maintain record annual production in a major beer market, South Africa. The brewer is targeting selectively bred plant varieties for beer-making crops to help meet rising demand amid climate change concerns. Now, the world's largest brewer, which agreed to pay about $100 billion for rival SAB Miller in 2016, is now hoping its enhanced farming techniques in Africa will eliminate barley and malt shortages. And finally, Amazon will stop accepting Visa credit cards issued in the UK from 19th January next year. The online retail giant says the move is due to high credit card transaction fees. It also said Visa debit cards will still be accepted. Now, Visa says it was very disappointed that Amazon is threatening to restrict consumer choice in the future. But Amazon insists the cost of accepting card payments continues to be an obstacle for businesses who are striving to provide the best prices for customers. And that is a look at our corporate headlines. Well, let's now head into a short break, still coming up on the show. We'll be looking closer at food security in Nigeria. And of course, Egypt's plans to attract more investors to the country's stock market.
The world economy as we know it is about to change. Global business reports highlight emerging markets, developing countries, and dynamic sectors worldwide. We feature top analysts and newsmakers to provide perspectives on every facet of business. From an on-the-ground perspective, we provide you with balanced and objective assessments. Fast, sharp, and insightful. Global business, only on CGTN.
Every story starts out like this.
Okay. We'll head up now.
Beyond the rush of the numbers, there's always a more fundamental question. What happened? Who has been affected? When market-moving decisions are made, who's responsible and why?
Let's get some reaction on ground. Joining us in Johannesburg is Sutra Naidoo.
This is how all stories begin. See how they end. Only on Global Business.
There's more to this place than just glorious landscapes. There's more to it than just, say, Table Mountain or glorious, endless salt flats. There's more to it than countries that are home to some of the deepest mines in the world. There is so much more to this place, even if it is home to some of the finest diamonds on the planet. It is the sheer diversity of the people who call Southern Africa home, and the relentless drive to make it a better place that make it so special. And we know that because this too is home. No one knows Southern Africa like we do. CGTN. See the difference.
Africa is the nexus of enterprise, and Global Business will tell you why it matters.
From the mega investment projects to multi-billion-dollar mergers and acquisitions.
Africa today collects, just in terms of revenues from taxes alone, $545 billion a year. If you take 10% of that and you devote it to the energy sector, problem solved.
All this on Global Business, weekdays at this time on CGTN.
Welcome back. Well, let's head to Nigeria now. The country continues to buck the global trend of rising prices. According to Nigeria's National Statistics Office, consumer prices are ticking lower for the 7th month running. Now, government figures released this week show that the inflation rate fell to 15.99% in October. That is compared with the same period last year. Now, prices of farm produce increased by about 6 base points to 1.13% month on month. And that's despite October being the primary harvest season. Well, a Nigerian commodity exchange called AFEX is now tracking commodity supply chains in the country. Its 2021 annual crop production report is forecasting higher prices across core grains in this new season due to persistent gaps between commodity supply and demand. The report focused on production levels across 6 commodities. Well, let's now find out more about their findings. We're joined by Oluwafunto Olashemo. She's a Vice President of Financial Markets at AFEX. Great to have you with us on the show today. Now, as we just mentioned, this week we saw the Statistics Office release those figures showing that consumer prices in Nigeria are definitely ticking lower. They also said prices of farm produce increased month on month by about 6 base points. I want to start off with your assessment on these numbers. Do they reflect your findings in that crop production report?
Thank you, Uche, for having me on your show this evening. Let's start by first looking at the holistic, taking a holistic view of the commodities market. Given that the Nigerian agricultural space is largely rain-fed, what we typically see is that you would have harvests for once a year for most of the commodities. And what would happen is at the beginning of the season, the prices would be low. And then as you move away from the season, the prices will go up until when you have a new season. But what we have seen, the current trend we have seen due to the unprecedented high prices that we have in the year 2020 as a result of border closure and the COVID, what we have seen is that for a new season that is starting October, November this year, rather than us seeing in the high increase in prices, the trend is not going the same way as we used to know it to be. And the reason is because a number of the farmers still want to leverage on the high prices that we saw during the 2020 season. And that therefore, we also see a lot of the producers and the big aggregators also aggressively buying some of these new commodities, even though the moisture content of some of these commodities are still high. And the other trend we also still notice is that you still have some old commodities like old maize in the market still trading at very high prices. And these high prices is also imposing indirectly and high prices on the new maize. And therefore, we still see this sustained increase in prices of these commodities.
Now, interesting, you say you expect to see increased production levels this year. In fact, you say farmers are more optimistic of production levels this year. But of course, looking at some of the reports that have come out so far, the World Bank, for example, warns that insecurity in Nigeria, effects of the pandemic, as well as climate change, flooding as well is an issue in Nigeria. They remain a significant threat to this, and of course, overall food security in the country. So explain to us your findings and whether you agree with the World Bank's conclusion.
Thank you, Uche. Very interesting question. If we remember, sometimes in 2019, the president announced a partial closure of the Nigerian border due to smuggling activities. And then sometimes in 2020, COVID hit the world and the global supply chain literally came to a halt and also halting most global economy. As a result of this, the implication is for us locally, a lot of these farmers then began to see that there were more increase in demand for the local commodities. These also then make the prices of the local commodities at an all-time high. Seeing the upward trend in these prices, the farmers then had a major incentive to increase their farming activities because they are also in the market. They know what is going on around the trends of prices in the market. So seeing the high prices in the market and then going into the 2021 planting season, the farmer wanting to take advantage of these all-time high prices in 2020 also increased the level of farm activities. Therefore, from the survey that we did, we're expecting an increase in the volume of production for most of the commodities that are surveyed. Also, part of the responses we got from the farmer was also with respect to the weather. Unlike the 2019 weather, most of the farmer did say that the weather this year was a bit more favorable. Although the rain came a bit late, but the rain was good enough. And compared to the 2019, where the rain came very late and the rain even still extended long into harvest, the weather in 2021 was completely different and favorable. And on the back of this, the farmers are very positive that the volume of production would be significantly higher than what they had the previous year. But in spite of the fact that the season and the weather climate was very good, and in spite of the increase in activities of farming activities by the farmer, that we are forecasting would increase the volume of commodities being produced. And we also need to be very skeptical about the rising level of insecurity, as most of the farmers are now having increasing difficulties in accessing their farm to be able to produce these staple crops. So again, in terms of level of production, we forecast an increase in the volume because of the farmers wanting to take advantage of the sustained high prices of the commodities, as well as favorable weather for the season. However, serious attention needs to be paid by all the stakeholders to the level of insecurity that is rising, so that the little increase that we are getting from the level of production would not be completely lost to insecurity.
And still, despite the increase in volumes, production volumes, which we expect, you also say that production this year may not be significant enough to handle demand pressures across those commodity value chains. So what are the identified factors that you think will influence those key agricultural indicators going forward? What are the top concerns, especially for farmers?
Again, data is always a good point to present some of the challenges that the farmers are facing, right? So before the restriction of the grain importation, or before the shutting down of the border, we've always had the the mismatch between the supply and demand dynamics, where the local consumption has been largely augmented by what is being imported into the country. And data has shown that over the last 5 years, the production, our production level for the grain, we've had a deficit of over 800,000 metric tons per annum. And then also, if you look at the commodities on the individual growth level, we have a very low growth level for most of the staple crops. It is about 1.34% over the last 5 years. Now, when you combine the deficits in the average consumption, as well as the slow growth in the production of this commodity, and you compare it to the increase in our population growth, you would realize that there's still a lot of pressure on the demand for commodity that are being produced locally. And that is also then saying that as a matter of urgency, there is a need for every stakeholder to have their hands on deck to boost the production by solving some of the main concerns that the farmers have. Some of them, largely from our reports, we still identify access to financing or credit facilities. As a matter of fact, most of the farmers still do not have access to credit facility for major reasons. One is that the credit facility is completely unavailable, either it is too expensive for them, or it just doesn't meet their need. So these are some of the factors that are affecting the level, or could hamper the level of production of these farmers. Again, just as I mentioned, agriculture in Nigeria is still largely rain-fed, and so we depend on rain for most of the production of these commodities. There has to be deliberate development and investment within the infrastructure so that we can have all year round production. And this definitely would help take away the pressure from the demand. And again, talking about the things at Apex, we kind of help to bring in some of this infrastructure, both the physical and the technology infrastructure, to ensure that some of the farmers that are within our network have better access to this infrastructure and to boost their production.
And certainly it is quite interesting and significant for the agriculture sector. Like you said, data is key in solving our issues going forward. But I'm curious, how do you expect this crop production survey to influence and certainly drive policy action in Nigeria and the decisions that are made going forward?
If you've taken a look at the FX 2021 crop production report, we had the report by surveying about 10,000 farmers, and then we also tracked the prices of commodities across 200 markets in Nigeria. And the report largely focused on the impact of land usage, input, weather, and the subsequent output expectation of the farmers. Having said that, as you would agree with me, that with every action and policy decision, proper intervention, for you to have a proper policy intervention, it has to be data driven. However, when we look at the availability of agricultural data in Nigeria, they are largely unavailable, and we have a lot of data asymmetry as compared to the developed world. So what we are hoping that this crop production report and the data from this crop production report would do is that it begins to then help the stakeholders identify the areas that need intervention, to what extent these interventions need to be provided, and how do you then measure the impact of this intervention as you apply them to the necessary area. And let me just make a quick example. Part of the response we got from the survey around access to inputs. So access to inputs is a major problem. However, beyond the access to inputs is also lack of information and education or awareness of the farmers of how to even assess this input. So there's a huge need to have to do some level of financial education for some of these farmers to understand the benefits of having credit, because a lot of them do feel that when you give them this credit, some of them see it as part of the national cake, while some of them even see it as you have something up your sleeve. So there's also the trust issue for them to even want to accept your credit. So there's a lot of education that needs to happen within that space to ensure that the much needed intervention are achieving the right objective by all the stakeholders. And this is what we hope that the FX 2021 crop production report would help the decision and the policymakers be able to achieve.
Well, we do have to leave it there, but many thanks for those great insights into Nigeria's agricultural sector. That, of course, was Madam Oluwafunto Olashimo. She is the Vice President of Financial Markets at AFEX. Well, let's move on now to Egypt. The country has announced a host of new measures to attract more investors and stimulate the country's stock market. Now, according to Egypt's financial markets regulator, fees for trading operations on the stock exchange have been slashed by about 20% in a bid to make the bourse more competitive. Here's CGTN's Yasser Hakim with more from the North African state's capital.
The measures, which were announced by Egypt's Financial Regulatory Authority, were triggered after market players resisted a government decision to implement a capital gains tax law that has been shelved for years.
We are just out post-COVID circumstances, and the market capitalization was shrinking during the last few years. So everyone saw that this is not the right time to start or to think of implementing capital gain tax. We saw that this publication showed a lot of deficiencies in the way the government was intending to implement the capital gain taxes.
Therefore, a raft of incentives were announced to appease traders. It includes a 20% slash on trading fees and a 50% tax cut on local investor gains on new public listings, or better known as IPOs. The announcement has been commended by stakeholders in the market, but most say it's still not enough.
There were important amendments in the capital gains tax law that made it better for investors and is better than the stamp tax law to a big extent. However, the Egyptian stock market still needs more and better incentives. We have to be an attractive market, especially to the private sector. We need to attract a larger segment of the Egyptian people. The Egyptian economy is strong and successful, but we need this to reflect on the stock market with a clear vision.
البورصة المصرية تتحط كواجهة للاقتصاد المصري.
There is cause for optimism, though, as the record-breaking success of the state-owned eFinance's IPO, which was the largest in recent years, invigorated the market.
The market is hungry for more stocks to be floated in the market. But the good thing is that it brought back foreign investors that were shying away from the Egyptian market for many years, and that they are back to the Egyptian market through e-finance. So for the government to capitalize on this successful IPO, they need to expedite the IPO pipeline and to have one IPO per month at least, so that they can, before these foreigners fly back again, then you can make them stick to the market.
Officials have in the meantime promised to continue restructuring the regulations to give the stock market a much-needed boost. Yes, Hakim for CGTN, Cairo.
And heading to Ghana now, the country is targeting economic growth of 5.8% next year as Egypt recovers from the economic shocks caused by COVID-19. But of course, the estimate is slightly higher than the projections by the International Monetary Fund of 4%. The government has introduced new taxes in the budget for 2022. It will scrap road tolls to curb the traffic buildup at stop points along the country's roads to boost productivity. Here's CGTN's Nabil Ahmed Rufai reporting from Accra.
Ghana plans to spend $22 billion, nearly 29% of its GDP next year. While the government says it cannot raise the entire amount on its own, it hopes to borrow from international investors to support its fiscal deficit of nearly 9%. The government is also introducing new taxes, including levies on mobile money transactions, to shore up internal revenue generation.
After considerable deliberation, government has decided to place a levy on all electronic transactions to widen the tax net and rope in the informal sector. This shall be known as the Electronic Transaction Levy or e-levy.
The government says it will use part of the money raised from the levy to support entrepreneurship, youth employment, and other infrastructure projects. It also wants to scrap road tolls to limit travel time to work and boost productivity.
Over the years, the tolling points have become unhealthy market centers led to heavy traffic on our roads, lengthened travel time from one place to the other, and impacted negatively on productivity. The congestion generated at the tolling points, besides creating these inconveniences, also leads to pollution in and around the vicinities. To address these challenges, government has abolished all tolls on public roads and bridges.
Ghana's economic growth fell from 6.5% in 2019 to 0.4% last year due to the pandemic. As the country's economy tries to recover from the disruptions caused by COVID-19, the government is targeting GDP expansion of 5.8% and inflation at 8% next year. But some opposition politicians say these targets cannot be met.
There is ample evidence in the provisional outturn presented in the budget for the first 3 quarters of the year to show that many of these targets will be indeed missed. Already, inflation for October 2021 is 11%. This clearly shows that inflation has been derailed, and as we speak, we have lost the target by about 3 percentage points.
Analysts, however, want the government to seal all loopholes in Ghana's tax system to rake in more revenue for development next year. Lawmakers are expected to debate the 2022 budget for Monday and then vote on it in December. It's likely to pass because of the government's majority, and that would pave the way for the funding of its economic and infrastructure projects next year. Nabil Ahmed Rufai, CGTN, Accra, Ghana.
You're watching Global Business Africa. Let's take a short break now, still coming up on the show. There's light at the end of the tunnel for trade negotiations between China and the US. And shares plunge in India's biggest ever stock market debut.
Change is on the horizon. Through the shifting of time, Africa's emerging tech landscape is creating new channels.
There's a hunger for local African content globally.
Shaped by innovation, carved out by a new generation of digital entrepreneurs, sculpted by a mobile revolution, and trickling down to the most remote corners of the continent. TechSpot is seeking out the new concepts in technology, disrupting Africa's traditional sectors.
You're watching breaking news on CGTN.
Welcome to the world today on CGTN.
Business in Africa is at a crossroads. We celebrate those who are adopting and thriving despite the challenges, from grassroots to big businesses. Global Business takes you along for the ride as we track the making of a giant. Only on CGTN.
Welcome back, and now to some international news. The virtual meeting of Chinese President Xi Jinping and US President Joe Biden is seen as a landmark meeting between the two leaders as it spells out the roadmap for future interactions between the two sides. That's amid an ongoing trade dispute. Now, China's Commerce Ministry told a regular press briefing on Thursday that the meetings have laid out the development path for both nations. While our Wang Hui spoke to an expert to get a clear understanding of what the dialogue means for the trade and commerce sectors.
Chinese Commerce Ministry says the virtual meeting points the way forward for the development of the two nations and outlines the roadmap for communication in trade and economic matters. The ministry says that Beijing will seriously implement the essence of the meeting in the next step. During the meeting, Chinese President Xi Jinping highlighted 3 principles for the two countries to follow. These are mutual respect, peaceful coexistence, and win-win cooperation. Experts suggest that these principles are of utmost importance in the trade and commerce areas.
Mutual respect indicates that the two sides should hold negotiations on equal terms. As far as peaceful coexistence is concerned, the earlier actions of imposing tariffs on each other were not good for the economic stability of both countries and the world. Care should be taken to avoid this kind of direct conflict in the future. To achieve win-win cooperation, both sides must reach agreement on a framework for cooperation. The China-US Phase 1 Economic and Trade Agreement, to some extent, has played a positive role in stabilizing the two nations' trade in 2020 and 2021.
When it comes to trade ties, President Xi describes China-US economic and trade relations as mutually beneficial. However, concerns still exist over the future of bilateral trade relations. Washington has been targeting Chinese technology companies on the so-called national security concerns since confrontation between the two sides began in 2018, including those on Chinese tech giant Huawei and social media apps such as TikTok and WeChat. The latest on the list was Washington's decision to revoke the operating license of China Telecom Americas on national security concerns. During the meeting between the two leaders, Xi pointed out that economic and trade issues between the two countries should never be politicized, and the U.S. should stop abusing or overstretching the concept of national security to suppress Chinese businesses. Dong says that such actions will have a negative economic impact.
The U.S. considers the so-called national security aspect an integral part of the trade. It has added many other factors to it, such as values, democracy, and human rights. The generalization of the so-called national security concerns will affect the stability of the upstream and downstream industrial chains, hurt market expectations, and disrupt normal economic order of the market.
Xi reiterated at the meeting that China will not change its intent to open up at a higher level. Experts like Dong are of the view that China will not resort to decoupling or restrict access. Instead, it will continue to open up, enhance the overall economic vigor, and follow the rules and regulations to embrace competition and challenges. Wang Hui, CGTN, Beijing.
And let's head to India now, where shares in digital payments platform Paytm have plunged more than 20% on the day of their Mumbai stock market debut. Now, the company raised about $2.5 billion in the country's biggest ever initial public offering. Some investors have voiced their concerns about the loss-making Paytm's business model. Here's CGTN's Radhika Bajaj reporting from Mumbai.
The poster child of India's fintech industry has gone public. Currently leading the digital payments ecosystem in India with 337 million consumers and over 21.8 million merchants, Paytm has grown exponentially since its days as a mobile recharge platform back in 2010. Today, its verticals include payments, e-commerce, cloud and financial services, many in line with the ventures of one of its oldest and biggest investors, the Alibaba Group in China.
It's a very simple business model about the way in which you create an e-wallet. But the crux is how exactly the technology which is used to make sure that things are seamless. And there are very few complaints which are there in terms of the final application. And I think this is where probably Alibaba has been able to make a big contribution by being one of the initial investors. And I think it's probably gotten a good reward, I would say.
While founder Vijay Shekhar Sharma is diluting shares worth $53 million, the biggest gainer would be Alibaba, since its subsidiaries, Ant Group and Alibaba.com, are selling shares worth about $730 million cumulatively. When the IPO opened in early November, the small portion of shares set aside for retail investors was oversubscribed 1.7 times on day one. Institutional investors warmed up slower, but by the IPO closing, shares allotted to them were oversubscribed by 2.8%. Market analysts say that Paytm's continuing losses, growing competition in digital payments, and the high share price of roughly $29 are behind the less enthusiastic response to its IPO. But some similar reasons were ignored by investors when it came to other unicorns leading India's IPO boom. Food delivery app Zomato, a loss-making business, launched its IPO in July, sold out on the first day and was oversubscribed 38 times. Beauty products-focused e-commerce player Nykaa went public in November, sold out on the first day too, and was oversubscribed 78 times. Analysts say these IPOs have brought in a new generation of retail investors in the 25 to 35 years age group to the market. They are investing in brands that they are also consumers of.
A lot of these platform companies that are listing are more relatable to people this age, rather than people who would probably be in their 50s or even older who would have not used or identify with these platforms as such.
The number of Demat accounts in India have surged by 40% or 20.4 million this year. Another indication that a new breed of retail investors, unsatisfied with low interest on bank savings and open to risk, are participating in the stock market. Ample liquidity in the market is another factor for the IPO frenzy. And analysts are bullish that for at least the next few months, this euphoria is likely to continue. Radhika Bajaj, CGTN, Mumbai.
Now, as more countries ease COVID-19 travel restrictions, tourism industries are now pushing harder to attract old and new clients alike. In Mexico, attracting tourists from the far side of the globe, particularly China, is a part of the plan to restart one of the country's most important sectors. Here's CGTN's Alistair Baberstock reporting.
Pátzcuaro, a town in Mexico's Michoacán state, is a colonial gem from the age of Spanish imperialism. Its attractive architecture, famous ice cream and iconic Day of the Dead celebrations attract hundreds of thousands of tourists each year. But there's desire for more, and from further afield.
Of the 200 million Chinese tourists who travelled internationally in years prior to COVID-19, Mexico saw just a tiny sliver, fewer than 0.1%. That's an issue the country is seeking to change, setting an initial goal of 2 million Chinese visitors a year as the country's tourism sector bounces back post-pandemic.
At Hotel Portón del Cielo, Pátzcuaro's only establishment certified as Chinese-friendly, the devil is in the details. No number 4 figures are visible in the place, hot water is available to drink, and mirrors don't face the beds, all common Chinese idiosyncrasies. The management know how to make Chinese tourists feel at home because they've had the training to do so. The state government here offers instruction and certification.
Nosotros acabamos de pasar el tema de la Noche de Muertos. We've just held our Day of the Dead celebrations, and we received a lot of Chinese tourism, which helps our local establishments to see this as an opportunity to learn how to better attend to those international visitors.
Indeed, in the hope more Asian tourism will arrive, Mexico's main tourism industry body is holding training courses across the country in a program led by Carlos Jacome.
Es atender una región de China.
To bring more Chinese tourism, the focus will have to be regional, linking certain touristic destinations in Mexico with specific regions of China to encourage a more personalized experience is far more effective, rather than targeting a country of 1.4 billion people as a whole.
As Mexico tries to encourage Chinese tourism, it promises the country will be ready to make them feel at home. Alistair Baberstock, CGTN, Pátzcuaro, Mexico.
Well, let's shift focus now to commodity markets today. Oil prices slipping below $80 a barrel. That's after we saw the US and China hint that they could tap into their fuel reserves going forward. Brent crude slid to a 6-week low, more than 8% off October's 3-year high. Meanwhile, gold prices edging up today as we saw the dollar easing and, of course, U.S. bond yields retreating from 3-week highs. That helped to lift gold's appeal today. Let's take a short break now, but still coming up on the show. We bring you innovative ideas aimed at improving lives at this year's Global Grad Show.
Africa is a continent of diversity, with varied climates and enchanting geography, and a people so distinct, but with a shared enduring spirit. We are at the heart of the continent to bring you the untold stories.
Let's have a look.
We celebrate Africa as it shapes its own destiny.
I've been Shirushi, Tunis, Cairo,
Juba,
Johannesburg,
Ethiopia,
Tanzania.
Africa Live. Find your voice.
You don't find the stories of North Africa by sitting on the sidelines. No one else will take you where we can in North Africa. And no one else will show you what it's all about. CGTN, see the difference.
Well, let's turn our attention now to the Global Grad Show. It is the world's most diverse gathering of graduate ideas for social impact. Now, the show unveiled about 150 new projects this year. We saw 464 universities taking part in the event, with about 7,000 applications and 2,600 project entries. That's made the 7th Global Grad Show one of the biggest to date. While CGTN's Nick Mudimba brings us more on that show.
The Global Grad Show is an initiative that showcases the world's most promising talent by providing a platform for graduates to put forward their social impact ideas and the best innovations to secure life-changing funding. The event celebrates its innovators through a yearly showcase and year-round activations supporting graduates and professors on complementing angles, knowledge exchange, entrepreneurship opportunities, and international exposure. Africa had 2 outstanding submissions. Ala El Hamadi from the Step Up Society at the German University in Cairo, Egypt, came up with a mobile app designed to reduce sexual harassment. Samuel Mugisha from Uganda Technology and Management University came up with an immunization calculator to keep track of children's health status, sending SMS reminders to parents or guardians about vaccine information for their children.
So basically, my innovation is a sexual harassment app. It's something to fight against sexual harassment. My research was based in Egypt because as a citizen in Egypt, sometimes me, my family, and like my female friends, we go through sexual harassment, either verbal or physical harassment, and the number is on the rise. So I wanted to do something that could contribute to decreasing the percentage of sexual harassment in Egypt and hopefully in the Arab world. So how it works is basically when you walk down the street, women could check in their location and they could talk about what happened to them, either sexual or verbal harassment. And what the application does is that it collects all the data and starts color coding the navigation system in blue and red. Blue being the safe areas and red being the dangerous areas to avoid, which could be really helpful for solo travelers, female solo travelers, because we don't know what are the areas that are safe to navigate alone or what are the areas to avoid. The application also has a function where we could talk to therapy professionals, one-to-one sessions with them, which are affordable sessions.
The 150 chosen submissions, which were showcased in all new virtual and interactive year-long exhibition, represent a 50% increase in the number of entries and a 70% increase in the number of universities compared to the previous year.
It will be an automation kind of a system that will be able to automatically reschedule each child's vaccination journey. For example, in Uganda, vaccination we do vaccination below 1 year for children below 1 year, and we look at the immunizable diseases. So some vaccines have dosage, and others have single dosage, others double, and the rest. So parents tend to violate these policies, and once they are violated, this child adversely get complications.
Other standout projects include robots that repair coral reefs, expandable baby shoes, an adaptable electric vehicle for urban commuters, packaging that dissolves in the washing machine, and a hugging chair to help people with autism.
Some of the standout applications include ideas from the Dubai Institute of Design Innovation. A graduate has produced a robot that can plant seeds in the desert. We also had a contactless way of applying vaccination in large populations by the Muthiesian University in Germany, and also an exoskeleton that helps rehabilitation of people with stroke produced by a graduate in Brazil.
At the end of the development journey, successful participants will have the opportunity to pitch for a 10-year fund to support program participants with seed capital. Nick Mudimba, CGTN.
Well, before we leave you today, a quick look at Africa's currencies. South Africa's rand falling over 1% today. That's after that surprise rate hike, despite expectations that the Reserve Bank would have kept the rate unchanged. Now, the rand weakened up to 1.6% today. The currency cut some losses after that decision, but it proved brief. It was last trading at around 15.68 rand per dollar today. Now, Kenya shilling continuing to plunge. It has fallen 7.4% so far this year, but it has been hurt mainly by the uncertainty wrought by the COVID-19 pandemic. Well, that's it for this edition of Global Business Africa. Remember, you can send your feedback to the contacts on your screen. You can also follow us on our various digital media platforms. From me, Uche Okoronkwo, and the rest of the team, thanks for watching.